Good afternoon, folks. Hope everybody is doing well, hunkered down, trying to stay out of the snow. It's a beautiful day out there, actually. Love the wind blowing my hair all over the place. It's absolutely perfect. Good to see you this afternoon. We have our experts here. We have Millie and Needy from Deloitte. And I think we're going to be joined by Megan as well from Deloitte, who will she will be specific to I think the rent assistance program, and when and if we get into that, she'll be able to help with that. But what I think we should do, Millie and I think Needy are experts on the wage subsidy program, the CEWS. I think before we get into a couple of these questions, I had Millie on a little bit earlier and we kind of chatted and thought that it might be advantageous to have her just kind of open up in a few minutes and just say some of the issues and challenges that she's seen going forward, and that might enlighten you if you're having trouble with some of the wage subsidy questions. So Millie, over to you.
Thanks, Greg, and hello, everyone. So as Greg kindly introduced, my name is Millie Bojic. I'm in the International Tax Group at Deloitte in Toronto. I've been a lawyer for 7 years now, for better or worse, and bringing with me a year-long now process of experience in the CEWS, or the Canada Emergency Wage Subsidy Program offered by the Canadian government. My colleague Needy Danic is also in the International Tax Group, and she has also brought a wealth of experience into the CEWS task force and is one of our chief proponents of the task force at Deloitte. So absolutely, we're happy to answer any questions you might have on the subsidy. To the extent your questions are in relation to other programs, we'll do our best to canvass them high level and generally, although our area of expertise falls within the subsidy program. So we're happy to refer you to other colleagues at our firm, or have Greg pitch in on any referrals he might have or information and background he has to best address any non-CEWS queries. Yeah, just to give you a bit of an overview on that. So I will briefly just mention that CEWS as a program is now in its, what is it, Needy? It is the 9th month of operation. Yeah. Oh, you're just on mute, just FYI, in case I...
I do like that sign.
I absolutely love it. Yeah, I think I'm going to make one for myself here. Greg's inspired me. But yeah, so it's in a 9th month of operation, and as a program, it's experienced a lot of changes since its inception. I primarily myself deal a lot on the technical analysis side and calculating revenues to determine what's actually qualified as a revenue for the subsidy itself. And there's all kinds of nuances there that have experienced changes during the last 9-month process. Before we delve into what those changes might have been, sort of the key January updates from the government is that as of January 6th, we now have new claim periods opened up. So now you can actually submit additional claim periods after November. You could do it for December, January, February, and March, or periods 11 to 13 is what we call it, which spans from December 20th to March 13th. So you now have maximum top-up subsidy rates of 35%. Your maximum subsidy amounts for employees on leave with pay would be $595. And the base revenue drop comparison months for period 11 would be the same as for period 10. So that's just sort of the high level recent change in terms of what is now additionally offered by the program. And we've also seen announcements from the government saying they're going to extend CEWS into the summer. So we know that it's going to be active until June or perhaps even July. Needy, please correct me if I'm wrong.
Yeah, we do know up until June for sure.
Exactly. possibly July, but stay tuned, folks. So that's sort of the high level intro on Qs and the changes. In terms of what Nidhi and I deal with in a sort of day-to-day real way, we deal with helping clients figure out whether they're eligible for the program to begin with. And so there's a lot of nuances over what is an eligible employer, what is an eligible entity that's allowed to be a part of the Qs program, and also in terms of calculating revenues, what is qualifying revenue for purposes of the program, what gets you through the door. And so the formulas we have seen change. So we had periods 1 through 4 where the formulas were sort of a bright line threshold test, and so if you met a certain percentage of revenue decline based on the appropriate sources of revenue cited, then you were kosher, and you could proceed from there to figure out who were your eligible employees and what amount of subsidy you could achieve. But now, we saw a shift from period 5 and on, periods 5 through period 7, where you now have a combination of 2 tests. There's a base subsidy and a top-up subsidy test. And so now you're eligible to qualify for the subsidy only if you have satisfy the requirements for both. And the formula differs slightly. So for top up, for instance, you'd only be eligible to receive it if the preceding 3 months rolling average was over 50% revenue decline. And if it was, then you would be able to then pursue the top up on top of the base for those claim periods. Then going forward, the test sort of stays on track for periods 8 through 10. However, they now added an additional option where you can, instead of using a 3-month rolling average for the top up, for the preceding 3 months rather, you can also now use a 1-month test comparing the current or the previous claim period. So there's more nuances, and I'm sure I'm missing a whole lot of details, but high level, these are sort of the general shifts that we've seen in the formulas calculations, and they do cause a bit of a headache for taxpayers and claim preparation, just to ensure that everything is on board and that it's done appropriately for the Qs program. So I'm going to stop talking now in a monologue fashion, and Nidhi, by all means, please. If you have any other comments to add in terms of, your findings of what have been your chief challenges and key kind of takeaways, please, by all means, enlighten us.
Thanks, Millie. My name's Millie Danic. I'm a manager also in the International Tax Group. Yes, Millie and I do work together in the same team. So it's easier to sort of have this rehearsal almost of sorts. I have been working on this SUS. I think Millie's covered a lot of the new significant sort of changes to the program. The one thing I do want to say is I think it's important, almost critical, to sort of go and find a professional who can walk you through it. It's not a simple sort of application process where you can sit and say, hey, I've hit 15% or 30% revenue decline, I can apply. I do tend to find there's so many nuances and the legislation keeps changing that it's almost becomes critical and also tedious enough that you have to reach out to a professional to sort of walk you through that process. That's sort of my big highlight. In terms of sort of revenue declines, what the government, I think, is, and Millie, you can sort of speak to this as well, but what we think that is happening is they're trying to make it as flexible of a program as possible by having these new legislative changes. And part of that is there are so many different elections on how you can determine your revenue declines. It's not as simple as going to your income statement and saying, what is my revenue decline? There are different ways to go about it. What is included in determining a revenue decline is also just as critical. If you have foreign exchange, or if you have, net versus gross basis and showing and presenting your revenues, those are different ways of sort of approaching how to determine a revenue decline. So part of the reason why it's a little bit complex is how to determine that revenue decline piece. And the other side of it is really payroll and remuneration. It's not a period that fits in perfectly for many people's payroll cycles and many employers' payroll cycles. So as such, it also again becomes a practice of going back and figuring out what can and cannot be included for the purposes of filing an application. But I think I'll pause at that, and hopefully if we have questions, we can probably cater to that.
I think from my perspective, even though, I have a math degree and I kind of understand the ins and outs of our financial statement, I'm only the expert at signing the document to send it in. So, if I didn't have the experts that we have doing and helping me with these, they start rambling on about what they're doing and what's going to be best for the organization, and it is extremely confusing. And with the constant changes, I think it's just so important to make sure. Otherwise, first of all, you could be compromising your organization down the road. You don't know that, or you could be missing out on an opportunity to collect this, maximize your claim. So it's really important to get that little bit of help. Val, did you have a question here for each? Oh, yeah. Yes, it costs money, Val.
Yeah, no, I was just saying because because of COVID and everything, we have a restaurant, so every penny counts, right? And so that, like I said, this is so far above this is so far above my pay grade, but I don't know, I just threw that out there.
Mhm.
How can you pay when you don't have the money to pay?
That's important. No question about it.
Because that makes a difference.
No, this is not a time where you can say, well, you throw the whole bank account at something. You have to be very, very careful with it. But at the same time, you want to make sure that you get what you can out of the subsidies. Otherwise, they're not going to help. And this is about maximizing. And oftentimes, it's a professional can go through it fairly quickly because they've been doing it
But with respect to wage subsidy, is an ongoing thing, right?
Yeah.
So,
and I think confuses me when I go over the applications or the submissions with my accountant. What confuses me a little bit is because it doesn't synchronize with our payroll system. And there's the movement of wages that have to go back and forth. And I originally did the calculation, said, well, we're not getting 75%. What are you talking about? Well, it was because it didn't line up with our payroll system. And so at the end, it all comes out in the laundry. But you got to make sure you've got the right person, not mixing the colors, and making sure that you're getting your laundry done properly.
No, absolutely. I agree with that, like I said, but ultimately you need to have the cash in order to do that too. So you need to run your business during this COVID, right? And then you need to pay the professionals for their knowledge. So
double-edged sword, and we're working
anyway, that was just
for that too, Val, where we can because what we're recognizing is there's a lot of small businesses who are trying to navigate through all of these myriad of programs. But one of the things that they worry most about is the cost of hiring a professional. So we're working on trying to get a mechanism together here in the region of Waterloo where we'll be able to help a little bit. Ian and I were talking about it about a week or so ago about going after some specific funding with maybe FedDev and trying to get a pot of money where a small business owner could come to us and we could offer a couple of $1,000 out for professional services needed to advance these programs.
Right. Yeah, like I said, I've only got grade 12. So, and other than, like I said, I've worked 2 jobs most of my life, but I get the life stuff, but this, I get to a point, and when they say it's easy and available, it's not easy.
Yeah.
You could be a rocket scientist, and these things aren't that easy. That's why we have the professionals on here. Greg and I have both been in government at some level, and easy is a relative term with government, and the complexity of it is, and we've already seen that. And Greg, we talked a little bit about the Ontario Small Business Grant Program and what was communicated there. and what's on the other side in terms of criteria and other things are not the same thing. So
Yeah, we've applied for it, and I don't know. We'll see what happens. It's in God's hands, who knows? But we do appreciate the professionals coming in, and if I could pick up a morsel, I'm good with that.
Yeah, well, that's great, and that's exactly what we're trying to do with this.
Yeah, thank you.
I have a math degree, and I can't even help my college-age daughter with her math questions. But that's because my math degree is so old that I'm not sure it's a degree anymore. It's probably grade 12 as well. But
I very much doubt that, Greg. I'm sure you're a wealth of information when it comes to all things math. But
I don't know. I love numbers, so everybody thinks I'm a little bit weird with that, but that's okay. I do have a couple of questions here, and I'm not sure whether Michael's on or not. I don't see Michael on. He had an interesting question as a taxi owner. But Val, you are on, and you are talking about, I think, your Kitchener location. Is that correct, or is that your Cambridge location?
I forget my question. Sorry, I typed that in last week.
Loblaws increase your property maintenance by $500 a month.
Yeah, a nice surprise, eh?
Yeah. Well, which kind of surprises me a little bit, because if you look at we actually had a real estate professional on our radio show, Ian and I did this past Sunday. And if you listen to him, and he's a pretty wise guy, talking about the fact that industrial properties, we have a 1.8% vacancy rate in the region of Waterloo with industrial. We have nearly a 14% vacancy rate in commercial. You kind of wonder why commercial property owners are increasing rents in any regard, because all they're going to be doing is driving that vacancy rate higher. So there's not much that can be done other than if some of the programs do include, I'm not sure what the rent subsidy and what the property tax subsidy from the province covers. But I'm wondering if that would go into the equation.
I think they started, I have a friend that's helping me with the books. I think that they started including that, the maintenance fees as part of the rent subsidy.
as an eligible
A certain
expense.
percentage of it. Sorry.
We have Megan Cito from Deloitte on as well. Megan, if you want to, oh, there you are. I was going to say, just unmute yourself. And you might have some answers. Megan's an expert on the rent program, so.
Well, pleasure meeting you, Val, and apologies if at any point you may have already mentioned this earlier. I was having a little bit of technical difficulties there. So good questions in terms of the way the rent subsidy works. It's effectively a new program, but the best way to think about it is that it's a sister program to the wage subsidy. So if you did quite a bit of work to kind of calculate your declines through applying the wage subsidy program, you're pretty much halfway there when it comes to thinking about how rent will work. So the program is at a high level. You get to claim up to $75,000 for each location. Sounds like it's one property in this case?
Yes, in this case, yeah.
And the key thing is take a look at your lease agreement if you're renting. What does your lease?
So I have to say something to you. Our lease agreement is at least 90 pages, legal size, 10 font, both sides. So yeah.
And get
your
a magnifying glass then, and you'll have to.
I will tell you as a funny thing, having read so many of it, I'm pretty sure my prescriptions jumped like quite a few myself through going through all the different lease agreements. The key in the lease agreement that I would focus on is you're going to have a part that will say what the rent base is. That's your magic number for the rent portion in claiming a subsidy. And then there's going to be those other items in your lease agreement that you want to look out for. So the first one is a part that mentions anything that we called tax, maintenance, and operations. So when you do your skim at that 90 pages, focus on anything that refers to what the landlord is responsible for and then what you're responsible for. And usually it'll tell you if you have to pay property taxes, or maybe you get a invoice at the end of each month or every 4 months where it'll say the landlord will pay first, and then you will get a copy of the lease, sort of an extra amount at the end of each period. That's another option.
If I may interrupt, sorry. So what's I asked them and I got what's broke down, it's called RANs. And so it tells us how much our rent is, and then it tells us how much our property maintenance fees, and you mentioned something about, it breaks it all down, but and that is all incorporated together to that we pay monthly as our rent. So where I was a little bit confused at the beginning was that it was when they asked about what your rent is. My understanding was what I have to pay every month, right? And that, but when I had to dive into it a little bit deeper, okay, so the month is like the rent is X amount, the property maintenance fees are X amount, then you got HST and all that other wonderful stuff on top of that to tally up your final payment every month, right? So we pay all that together monthly, the way it's set up. But I do understand what you're saying about, you know, what your actual rent is and all the other stuff that's attached to it.
That's all right, because maybe you're paying other items and it's not actually included in the lease agreement. You just want to watch out because that's not something that could be covered under the new subsidy program. So if it's in your lease agreement and you're paying that to your landlord as sort of starting point, I would assume that generally you are allowed to claim those items. Now, under the new rules, you got to watch out for certain items that you can't claim. So you can't claim anything such as that HST amount.
Yeah.
So let's say you are looking at it and going, okay, maybe I can recover some of that. You can't claim any taxes. So anything related to sales tax, you won't be able to claim. But if you want to look at other items that are going to be in your lease agreement, and let's say it's an amount you're paying directly to the landlord, you know, and I would say it can't hurt to just take a quick look at the CRA technical guidance on what's included in and what's excluded when you're filing for your rent subsidy. It will give you a list of what's good expenses and what's kind of what I call the bad bucket of expenses. And then when the day you're applying, you know how you said you had like that one number that you're effectively getting, that one big monthly rent? Well, there's the application actually has a little box that just states your monthly rent. And you won't need to break everything down, but for your files, just make sure you keep a copy of what specific expenses are that you just mentioned, including base rent. But when you're actually filing, you'll only put in one number, which is that big number you told me that you pay each month. That's the number you're going to go and submit.
Okay, but that big number at the end of the month, or that big number is also includes HST. So I pull that out. That's what I've been doing.
Yeah, and when you apply, it will tell you these are the items you can claim. These are items you can't claim. So you can run a mock version of it, just kind of like go see what it's like to apply, and then take those numbers out or take those items out that you don't think will, that's already been included in your monthly payment. And then once that happens, it'll give you a better sense as to what you're actually allowed to claim.
Okay, all right, thank you. I appreciate that.
No problem.
An important question that I think would be good to ask now that we have like 3 accountants on the line is, you know, all of these programs, these subsidy programs and loan programs with a forgivable amount going forward. You know, a lot of businesses have applied for many of these streams. Which ones of those, or do all of them, are they going to be counted as revenue, and we have to be concerned about what tax the business might have to pay on these subsidies coming in? So I don't know who wants to, maybe, Needy?
So I'll take the question for Sue. So I'll pass it over to Megan, who can probably shed some light in terms of rent subsidy. For Sue's, when you get the subsidy, that is a taxable subsidy. So when you file your returns, that will be included in your taxable income and you will be taxed on it. In terms of actually determining the whole revenue decline for the purposes of applying for the rent subsidy, or sorry, the wage subsidy, you would not be including the wage subsidy that you're getting from the government because it essentially subsidizes your costs. You're only looking at your sort of business revenues, and it depends again for something, you know, if you have your income statement, you look at your sort of top line, you start there, and then you start looking through the sort of income statement and see, hey, do you have interest income, like, you know, bank interest, for example? You would include that in as well. But you do not include the subsidy that you get from the government for the purposes of wage subsidy. That only comes into play when you file your taxes.
Megan, what about the rent subsidy?
So the rent subsidy is taxable, which means you must include that amount in your annual return. So we're kind of coming up there, and you will need to include that when you're calculating your taxable income. So a little bit different than the way the wage subsidy program works. I think where people usually run into a bit of trouble with rent subsidy when I think about sort of tracking and reporting is actually if you have received the benefit of any deferred rent. So one thing to keep in mind is that when you're applying for rent subsidy, and let's say you received a deferral with your landlord for, let's say, October, there is a requirement that you do need to actually make that payment that you're receiving from rent subsidy. You need to pay that amount to your landlord if it's related to that October period that you're claiming. You have to make that payment within 90 days. And so something to keep in mind too, it's also not just a question of revenue, but a bit of cash flow as well. Because the idea is that once you get that cash and you've been given that deferral, you now have the opportunity to pay your landlord based on an agreement that you've previously reached. So something to keep in mind in addition to think about it from a revenue standpoint, it's also just cash flow as well.
What if we get to the end of the, you know, let's take the first $40,000 business loan, and if you pay it off by December 31st, 2021, you'll be able to keep 10,000 of it. Is that 10,000 going to go into revenue?
Good question.
Is that more from maybe for Needy on the revenue side?
Is this in the context of sort of the loan programs that are available, or are we talking in terms, okay.
The CEBA, so the
Right.
emergency benefit assistance.
Right. So for CEBA as a team, we have very high level knowledge, but what we can do is sort of get back to you on how it's being treated. We do have a team that is quite familiar with CEBA and those programs. They just couldn't make it today, but in general, I think they can sort of respond to this and sort of suggest how it's being treated, and how it impacts, and if it impacts any of the taxable income and corporate filings and whatnot.
I guess one of the things while you're asking your colleagues about that, I've heard from one restaurant owner who thinks they've been screened out of the Ontario Small Business Grant because when they're asked about revenue and revenue drop, because there is a revenue drop provision in there, that they ask specifically whether you've got the CEBA, and then are assuming that 10,000 of the 40,000 is revenue. So the real question is, when do you book that? Or I guess, I mean, I would assume that would be the reason. If they're asking about that, they'll be assuming that that's revenue in a certain year. So that's actually something important for many businesses that'll be applying for that program.
Sure.
So as you say, Nita, when is it being treated as revenue? Is it when you receive the loan? But that assumes that you're going to pay it back, which means you get the 10 grand, right? So, you know, I think that's maybe part, because that'll be part of those specifics of some of the other programs.
It shouldn't be that. It should only be taxable income when it becomes taxable income, and that's when you settle the outstanding balance. So if you pay the $30,000 back and you don't have to give the extra 10, then at that point you need to bring that into income.
But I guess the point is, Greg, I mean, you're getting conflicting things even from the
I know.
application process itself. So one other thing, Greg, I think maybe, and we've got some of the experts, maybe they've got some around this, is there are several programs. The BDC program, which I think is, I forget the names now, I think it's the regional RRRF program, regional relief something program.
Relief fund.
Yes, relief fund. And I think one of the things that was, we had a webinar, I don't know, a month or so ago. It is stackable even if you're getting rent relief or wage subsidy, and some things are excluded in those programs. You can actually apply in that program, according to BDC, to get top-ups for the things that might have been excluded under the provisions of other programs. Are any of you, you know, have you had any experience in trying to do that to get that top-up, if you will?
Well, I applied for the government grant for the restaurant or whatever. I don't remember that question though, to be very honest with you. Now, like I said, my head's pretty full. There was, I was just trying to think, there was an opportunity there for me to claim hydro and things like that, water, gas, which I didn't do before. So whether it's going to get approved or not, I don't know at this point. I just did it last week.
Was that
So-
under the recovery fund program with FedDev, or was that with the Ontario government?
The grant one, I don't.
I think
I don't
the
know.
one I'm referring to is the one with FedDev or BD.
Yeah.
Yeah, it might be FedDev, and that is stackable. It's
Yeah.
not either or. And I think
Yeah.
one of the things we're encouraging people to do, especially in this period, is to go through the main ones: the rent, SEBA, and the wage subsidy. But then also go back to these other programs for anything that wasn't covered. You should be able to, in that particular program, at least apply for some of those. And then there's the provincial ones you talk about, which is what, hydro and taxes. And then there's the Ontario Small Business, which
The conversation that I had this morning with the federal government was, if all else fails, if you're finding difficulty for whatever reason getting, you know, approval on some of these, to actually look at the RRRF program, which is through FedDev, because of exactly what Ian said, that it's stackable to some degree, but it also is a stopgap for people who are falling through the cracks in some of the other programs, that this program has, you know, broader things. It could end up just being a loan, or it could be a loan with some forgiveness, or it could be a program of total forgiveness. So there's all kinds of variations within the RRRF program that I think businesses need to consider if they're falling through the cracks in some way or another. Megan?
Yeah, I actually think Greg and Ian, you guys have an excellent point. And to follow up on that, you know, I hope I'm not speaking out of turn with my other colleagues here, but the way I would actually approach it, if you're looking at all the subsidy programs that we've just kind of threw in terms of acronyms, you got CERS, you got SUS, you got like FDEV, I think is one I heard. Focus on the federal government one, because exactly as you mentioned, especially on the rent subsidy, it will not cover everybody. And I'll give you a good example. If you are in a franchise arrangement, there are very specific rules related to how you speak and talk to different affiliates. So, you know, you could get easily just streamed out of that program. And if you apply for wage subsidy, that's a really good one to focus on first, because, you know, there are specific deadlines that are due at the end of this month. So if you haven't and you're thinking about putting it off, that's a really good one to focus your attention on right now, because there is a sunset time. And then as you're already going through the calculations, think, wow, I've already got a lot of the work done. Now go to the rent program that I've been mentioning a little bit earlier. And then really focus on that provincial, local, stackable options, because not every single federal program is going to fill in the gaps that we hope that it could fill in. So, you know, and they don't all, and I think the important part too is, and hopefully this comes across, the programs don't always speak to one another, even though we like to think that they are. So each program does in fact take its own sort of time. Some are forgivable loans, some are loans, some are low interest loans, and some are simply amounts that are included in revenue and are not included in revenue. So I think that it is quite fruitful to sort of do that upfront homework, just identify, make a list of all the different programs and kind of go through them system by system, starting at the ones where you think are going to get the biggest bang for your buck. And usually that's wage subsidy, and then work through rent, and then go through your stackable options. So I really like that approach. That's great advice.
So
That's a
I
good
had
idea.
I had a case today, Megan, and this might be something that you could weigh in. And Val, I know it's going to be of particular interest to you, where there was an arm's length issue between the tenant and the property owner, the building owner, where the spouse of the building owner actually owned the business that was there. They qualified no problem under the old secret program. Because her husband was a kind enough landlord that applied for the original rent subsidy program so that they could be covered. And then that program was wound down. And what they did was they, I guess to some degree, because she was probably concerned about living in the same household as her landlord and not paying her rent. She did everything, even sold, cashed in old Coke bottles to make sure she could pay her rent. She went to apply for the new program, the CERS, did not qualify because of the arm's length issue. She got a call from a CRA saying you don't qualify. And the landlord now, he can't apply for it because she's paid her rent. And so he doesn't have a tenant that's in default. So so what the recommendation from the federal government was, you got to tell them to go to the RRRF program and FedDev and see what they can, muster up there, because it's a web that maybe possibly can't be untangled at this point.
Wow.
And a good question, I say, at least even my payroll colleagues have said this, it's also maybe a test on sort of where what's your financial hygiene right now. So for example, that arm's length comment is really, really relevant, especially for small, medium clients that I work with, where maybe it's mom that owns one part of the business and we're going to invest in a franchise in another store, and dad's the one that operates it because it's dad's business. And then we have some intergenerational wealth planning. Maybe the son owns another franchise. Lots of relationships are mixed up there. And so what the rent subsidy program will target is exactly those relationships. It doesn't fall neatly into the way the rent subsidy program works, but it actually creates a lot of other sort of non-rent subsidy, non-wage subsidy discussions in terms of tax planning for these families to be thinking about. Because generally, when you're going through something such as understanding the way the structure of a business works, usually a lot of what my job involves is kind of working with our clients to educate a little bit about, well, how exactly is mom giving advice, or is she giving any advice to dad? Why does she have any ownership? Maybe we got to break that up. Not rent subsidy, but not great tax hygiene either, or financial hygiene. Another question that can come up from payroll is, you may be having a lot of employees on a lot of different arrangements, and that's very challenging from like a payroll and bookkeeping standpoint. This is a chance for you to kind of run through your numbers. And I have to say, in a weird way, the program's been kind of nice to be able to have that conversation with clients and say, are you doing this in an efficient way? I see someone here who's on a bi-weekly, and then you have someone else who's on a weekly approach for your payroll. How did this happen? And a lot of times when you're running your own business, you really don't have a chance to sort of stop and get that fuller view. Having these programs in a way lets you look at your payroll, looks at your properties, look a little bit at how you're recognizing your revenue. So those are good conversations to have. And if you are applying for the program a little bit, just thinking you're going to get it because the portal's open, so let's just run through those numbers. Keep in mind as well, there is going to be scrutiny in terms of how are you actually supporting your claim, and do you have that good financial hygiene that we like to talk about with our clients. So it's sometimes not just rent and wages, it's a much larger conversation. and it does necessitate that time.
Yep.
I would
Val?
just simply add, oh, God.
Go ahead,
Sorry,
Needy.
go ahead. No, no, finish. Sorry, I didn't mean to
I just
interrupt.
wanted to add a little bit on Megan, because we do tend to see, and this is a conversation, whether it's a small, medium client or a larger client, it's the support. It's also about sort of, it's helping you figure out your hygiene at a financial, rent, payroll levels. But at the same time, it's almost becomes critical to have that support. If you're saying I'm filing for something, it's now really important, because they don't really ask for these documents when you're applying. It's generally, just for a wage subsidy standpoint, I can say it's a pretty simple form. You just fill out what you need to fill out and you submit and you get the money. The issue we sometimes find, we run into sometimes is, okay, how did you get the number? Are your numbers tying into your statements? Are your statements then tying into your ledgers or bookkeeping? So I think having that sort of making sure that everything sort of ties into each other becomes almost very critical when you're applying for these programs. And sometimes that's where we sort of either run into problems and where we actually step in to help our clients. So part of it is hygiene, part of it is to sort of learn the nuances and the list of different programs, but part of it is also making sure, having the support, making sure you're keeping those documents, even if it's a working paper, an Excel document where you're, crunching down the numbers, keep that, because that's important.
Yeah. Val, go ahead.
Yeah, no, I agree with you. I started journaling too and everything, because everything, when COVID hit, what happened is we had nothing, we all of a sudden had to meet all of these bills that we would normally, when we were in operation, are fine. So we pulled everything from the business, from the personal, from the everywhere. It's going to be a real challenge next year, but I was trying to journal everything to try to keep that on track. But my question is, so we have a family run restaurant, and so my husband has been the one to he's been, instead of getting Cisco, which is our food supplier, we've been really looking tightly at the numbers of how much something costs here as opposed to him driving to the wholesale and him making stuff and things like that. Now, my daughter also has been working there, and so she has been always on, we've been paying her, and that. Now, when you were talking about arm's length, are they going to question her or anything like that? Because it is a family-run business, and my daughter is working there. She was working there years prior to COVID, and during COVID, she's been working more, because what we found too is a lot of the staff too, because of CERB, don't necessarily want to come back, or want to come back minimal, so that arm's length, as a mom, I'm thinking of my daughter. When tax time comes, are they going to go, oh, your parents have a restaurant, so, whatever?
So I can speak a little bit about the wage subsidy and how they explicitly actually ask if the employee is an arm's length or related. So in this case, it's your daughter, so it would be not an arm's length party, essentially. And they apply a different formula in determining how the payroll itself is determined. But the key, I think, and Millie, you can sort of chime in here too, is we've seen times when the question becomes, were they employed before March 15th? So before the program came in, were they employed, or did they start working after the program? Because they're trying to sort of curb that sort of bit. So it sounds like she was working prior to it, but I think that's going to be a key in making sure that you have, whether it's a pay stub or some sort of a way to sort of support, hey, no, she was on the payroll, we were remitting, she's been there, she's been working with us. That is how you sort of support that side from a wage subsidy perspective, for sure.
Okay. All right. Thank you.
I think Val's probably got the longest list of any small business owner of things that she's going to review in her setup of her operation going forward.
Well, one of the things too that we have, when I was looking at the PPE support, so we have more than 9 staff. So the website that I found, it was you can claim for this $1,000 or whatever for the PPE equipment if you have up to 9 staff members. Well, we have more than 9 staff members. So we did not, we have receipts still. I'm at a loss.
You will not, yeah, you will not qualify for it if you're
Why?
over 9 employees. It was just a determination that the government used. It's, you know, it's like I've always said, it's bureaucrats working in offices with no windows. They don't know what's going on in the rest of the world, and they just write the legislation and the regulations around what they think will meet the budget target that the finance department comes out and says, we're allocating X number of dollars here. How do we make sure we've got enough in there? And so they analyze the number of businesses and the ones that are really struggling for PPE. And the determination from that level was we need to focus on small businesses with under 9 employees. But
Well, Megan, Megan, would that be one of those areas where that's a specific program for PPE, but that FedDev program, because it is a catch-all if you're screened out, is that one where taking those and submitting those, or Greg, maybe you know, that's one I hadn't thought of before. At least applying through that other program, the RRF program, because it does have a broader band of things that it'll at least consider. It may not pay you, but at least you can apply and say, I was screened out for X, Y, or Z, whether it's rent or other things, and you can apply because it is stackable. I mean, that may be one of the options for that particular program if you're screened out because of the employee count.
Yeah, that's a good question. I have to familiarize myself with the specifics, especially the way the stackables work.
Yeah.
But it is, that raises an interesting point, right? Like the federal side only covers so much. You might, based on what other programs are available, have better luck looking at alternatives where you think you have, especially a line item expense, where you can probably recover that. I would recommend sort of looking at other programs. It's funny you mentioned PPE, different sort of tangent, but I have a client who has been able to sort of repurpose their business on the manufacturing side to accommodate for PPE. And the surprising part is that that impacts their revenue at the end of the day. So they were in a spot where they would have had a significant revenue decline if they did not go ahead with providing PPE. And now they're in a spot where, you know, they can't really go through that process. And the amount that you can claim is a lot lower. It's because they did such a great job in providing for PPE. So just remember that I do think that there are other programs that specifically target and incentivize different efforts that businesses are providing to addressing COVID. So although no, we're not able to apply from a rent subsidy and maybe even wage subsidy because those revenue numbers are the same, those programs mentioned by Ian and Greg previously may be where you should be thinking about applying, especially if you are doing something like PPE and it's actually impacting where your revenue numbers are, because you kind of fall into a weird spot, even though you're doing something very important for the community. So something to keep in mind for anybody who's in the manufacturing side or who may be using that type of, or repurposing their business a little bit to account for some of the changes that we're seeing.
Ian, I think we got to reach out and get somebody from FedDev, talk about the RRF program. And at least make us aware of some of these other programs that, you know, if they're falling through the cracks, what is available for them.
Yeah, I'll make sure I talk to Dana on our side because, or Jenna from my team, because we had an individual who did, I'm sure he did a webinar through our part of our business success here, so we could reach out to him. And it was interesting. I think we were in those days more focused on the changes to some of the bigger programs, but those programs are set in stone now. Don't think there's going to be many changes to that. We're hopeful that we're going to, Greg and I will make along with lots of other people, interventions on the Ontario Small Business Grant Program, which may or may not see fruit, but certainly that one with FedDev, because it's stackable. And he made a point of pointing that out, saying if you've been screened out or things have been excluded in some of these other programs, that you should apply to FedDev because it may be covered there. So I think that's a maybe we'll have next time we'll have our expert, and we'll also have BDC or Fed,
Yeah.
in the next
I
week
thought I
at
should
some
also,
point. So
sorry.
Go ahead, Millie.
On that point, I think it's also really helpful to know that there are resources online to sort of start off. Experts are critical, as we've sort of covered in this call, and it's always really helpful to get that input. But the list of all of the available kinds of programs is on the canada.ca website. So you could always start there just to get a sense of what they actually are. So you heard a little bit today about CEBA, SIRS, and CEWS, but there's also the Business Credit Availability Program, RRRF, which we've just sort of touched on. There's a Black Entrepreneurship Program, support for Indigenous businesses, large employer emergency financing facility. So there's a number of them. And so the key will be, as Megan alluded to earlier, is to understand what is the interplay of these programs. If you were to apply for some of them and say you were successful, can you now count some of those grants or subsidies received against other ones? And you'll have to be very careful there, because you can't necessarily continue to get funding under one umbrella if you're getting it under another. And so I think that's where calling on your experts, whether it's us at Deloitte or whoever else is helping you out on the advisory side, that's where it's really important to just understand how they interact. And I think earlier Val brought that up, but you are also eligible for some provincial grants, and I think Megan spoke to the importance of checking in at every various level for stacking. So in the local side, you do have the Ontario Small Business Support Grant, and they do actually offer for the eligible businesses that were experiencing COVID closures and shutdowns. They do offer municipal and educational property taxes and energy costs, such as your electricity and natural gas bill, and so they'll assist on rebates in respect of those kinds of taxes and expenses. So just something to keep in mind, that there's going to be a lot of assistance available. The key will be to do your due diligence and do that good research to make sure that you get the best possible advice. I mean, today, a purpose of us even coming on is to just give you a bit of an insight. This is, we're not here to, provide sort of Deloitte advice. So we're not sanctioned to do that. This is sort of speaking in our individual capacity as practitioners. And if there's anything that we can do to answer, we obviously would. But absolutely, in terms of, getting that clarity, making sure that the applications are sound, making sure that we understand their interplay, you definitely want to work directly with an advisor so you can actually get that sanctioned advice.
And just one more thing, just like Millie said, there is a website that sort of tracks all the programs at a federal level, but Ontario does something similar where they have a COVID-19 and they talk about tax reliefs and the various sort of, whether it's the loans or sort of rebates that they're talking about, financial relief. So they do have it in one place, and that may be a good starting point. And there are some sort of key ones to remember, like if you have employees, you have certain EHT perhaps exemptions to remember. You'll have a T4 you'll be issuing T4 soon. Sort of going through that list will also sort of help you keep in check how your sort of commitments and compliance requirements will be needed going forward, because each one has its own sort of nuance of, hey, you do need to report this or you don't need to report this, and each program lays it out differently. So that might be a good starting point as well.
Well, we got about 4 minutes left. Does anybody have any other questions or comments or input? Yeah, go ahead, Bill.
Sorry, I have a quick question. Are you guys aware of any with respect to the banks, and we have a corporate credit card with obviously high interest rate and all this other stuff, and we've had to use it a lot. They really haven't. Are you aware of any banks or anything that could give you a break on the interest and banking fees and whatnot on that? Just thought I'd throw it out there.
This is a great time to be a credit card company, let me tell you.
Oh, no kidding. Or skip the dishes.
That's even worse.
Yeah.
I don't know of any. I'm there are always discount cards here and there, and I think one of the aspects you might look at what the balances are, or what the balance is, and is there some validity at looking at something in the form of a low interest or no interest loan to pay that off to at least get you over the hump.
You want to give me a loan in a restaurant during
well,
COVID? Nobody's going to give us a loan.
If you go through the RRRF program, and all you have to actually do is log into Google and go RRRF, and the link will come up. There are programs in there that are no interest loans, and they're not specific. They don't put a tag on there saying no restaurants, please. It's small businesses, and so I would scour that site. It's really, if you go into that site, Val, you're going to find links for all different types of businesses and structures and programs. You need to go through them all and have a look at the criteria and see where you fall, because you may fall into a category where you could get a low interest loan or a no interest loan, a low interest loan with some of it forgivable, or a complete grant where there is a certain amount allocated towards recovery.
Yeah.
So have a look at that. It's worth going through that site, because I think, as Ian had pointed out, they are stackable.
Yeah. And just a quick perusal of RRF. I've had a few times where I've had to sort of go through a list of programs at a provincial level and at a federal level to just sort of see what may or may not be applicable to the client, whether it's property tax or, whether health tax, we're talking about it. But in response to RRF, my understanding at a very high level is that it not only sort of says, hey, it's for rural businesses, it's for small, medium businesses, it's for, there's no specific to the industries, but they try to help certain sectors as well. They're trying to help women-led initiatives and businesses as well. So I think depending on what the criteria are to get in or to file and so forth, there are quite a few different avenues. But similar to how Greg said, just on a quick perusal, there are just multiple ways to go about that.
Yep.
All right, thank you.
Yes, we will. Yes, we will. Well, Millie, Needy, and Megan, thank you very much for joining us this afternoon. There will be, if you, and I don't know how long, because our staff are working triple time now, but at some point they will put the recorded session of this up on chambercheck.ca. So you'll be able to go back and review some of the commentary or some of the conversation. So that will be available probably, we've got to give us about 3 or 4 days before we get those up, but they'll be available on chambercheck.ca. Otherwise, we'll be back right here with Ian sitting in the hot seat on Thursday at 2 o'clock, and anybody